Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. For those of you who are new, this is the Greedy Trader channel where we talk about all things trading, specifically market profile, liquidity, and volume. Now, if it's the very first time that you're coming across me, you'll see I have a ton of other videos covering this particular topic. Now, I know, again, there is a ton of stuff out there to do with trading, and I can guarantee you guys, as sure as I breathe, a lot of it is BS. But don't take my word for it. If you've been following this kind of content already, ask yourself, have you learned anything? Most people would say they have, and that's the reality. In this channel, we do authenticity. So one of the things I am going to do is continually reinforce, continually show you real practical stuff that you can go away today and implement and get a degree of results. So if your trading has been challenging, if you found that you've been following a guru slash guru slash whatever it is they call themselves these days,
That is one big pile of shit.
and it hasn't really been happening for you, then you owe it to yourself to stick through this video and learn something that you can take away and you can apply. I'm going to keep it very short and sweet on this particular video. So I'm not going to do what I normally do, which is kind of give you that heroic motivation to want to sit here and do this. What I'm going to show you today, I can assure you it's going to have practical application in the future for your trading, for your life in general, and it's up to you to sit and do it. I've been in the business for more than 15 years, right? So I'm a 15-year plus veteran when it comes to trading. I have traded everything. I've been on the institutional side as well as the retail side, just like you. So I know what the deal is. I'm the guy you can't pull the wool over my eyes, right? So I can smell a trader who doesn't know what they're talking about. I can smell a guru who doesn't know what they're talking about. I can assure you 90% of what I'm seeing on YouTube, which is the motivation for me to keep this channel going, is just BS. Anyway,
it was all bullshit.
on to the matter at hand. So today we're going to talk about trading volume or volume trading, whatever it is you call it, but we're going to talk about trading volume. Now, in my last video, I believe we touched on this topic in relation to Forex. Now, I know you guys love Forex, but one thing I did promise today is the next video I was going to do on volume, I was actually going to use the equity markets or the stock market. And the reason for that is that volume is actually reported on the stock market, which isn't the case for FX. Yes, I argue that Forex is incredibly centralized these days with the likes of Virtue, well, I shouldn't say Citadel, but the likes of Virtue, who control about 95% of all virtual FX. They are in a way centralizing the quotes. So arguably you can say the Forex market is no longer a decentralized market, but for the purposes of theory, Forex is decentralized. It doesn't report volume. It's a network of dealerships. A lot of the business is done on the interbank market as well. So it's a two-tier market. So it's very different from stocks, right? Stocks, we're talking about exchange-based products, high degree of standardization. It's just not the same as Forex. So it's easier to kind of take on the concepts when it comes to volume. So if you are thinking about getting into stock trading and you have been unsure, you don't know what you're getting into, you think it's a little bit harder or there's less access, then that's not true. If you wanted to access the stock market, there are CFD brokers. So let's say all you do is trade Forex every day and you've got an MT4, MT5 platform. Well, most of the brokers do offer stocks, right? And they offer a good bunch. I mean, it's usually the NASDAQ large caps, mega floats. So obviously getting the parabolic moves can be a little bit different from like trading small caps, for example. So there are those what's the word, holdbacks, right? If you want to broaden your stock trading horizon, then CFDs might not be the way to go. But if you're looking to get in equities and you're a new trader, and I always say, if you're a new trader, you want to start with the stock market. It's much better than say starting with Forex. Forex is hard, and I've said this time and time again. It is hard, it's different. The symmetric nature of that market means that it is very difficult. You have to really build a skill set. It can take ages for you, and sometimes it's even difficult to employ your own discipline. So it's not something that I would advise that you get into in the beginning. I'd say start with stock, and then once you've built a good competency and you've got some discipline, then you can start pushing into assets like Forex, right? Or maybe even push into futures first and then Forex. But let's say you pushed into Forex, and then you can push into future, and then you can push into more sort of complex asset classes like options, for example. So that's how you build your knowledge in financial markets. That's how you become a professional. It is sometimes mind-boggling to see people considering themselves professionals, but they don't know anything about the market. All they know is, oh, I know how to take a trade on euro dollar on my mobile phone. I mean, that's not professional, guy. That's just you thinking you're a professional, but really what you're doing is you're gambling. So I would always say start with stock. So I'm going to dedicate a lot of this video to the stock market, right? So everything you're going to learn here is going to be a lot to do with the stock market, but then it is transferable, and you'll soon see how it is transferable into other asset classes where volume is reported. So for example, crude oil. So if you trade a CFD crude oil, there's no reason why you couldn't employ some of these techniques or strategies into trading crude oil. Or you might trade gold, for example, which has a reportable futures. So again, you can apply some of this to the futures market. Anyway, so what are we talking about in terms of when we think about volume trade, right? What are we looking at? So step one, we are looking primarily at the bottom of the screen. So if you look at the bottom of my screen, you can see all these bars. Now these bars are the volume traded over the course of a day. This is a daily program. So if you are trading over the course of a day, this is all the volume that traded. So this is the rotation of stock across that day. So how many times a particular group of stocks were bought or sold. So that is what's reported at the end of the day. So this is the complete volume for the day. Now you can visualize this in any time frame, 1 hour time frame, a 4 hour, a 5 minute, whatever. You can see the volume trading minute to minute, hour to hour, etc. Now why is this important? Well, the markets are largely about demand and supply, right? I know it's a cliche, because in reality, what happens is you get an algorithm quoting prices, and those prices are gonna hit orders, right? And that's what's going on. But as the algorithm moves prices or bids prices up and it hits orders going higher and higher, there are points when that algorithm is going to hit a lot more orders than normal. And that is what we're looking for when we're trading volume. We're trying to find out, right, why were there so many orders on this day here? What does that mean, right? And that's what we're trying to discover. So step one, we want to mark out. So let's say we're trading today, right? It's huge breakout pre-market on AM, right? Let's say we're trading AMD as a stock, and we wanted to get some historical context on what the volume is, let's say prior to the 28th of February, right? So let's say we hadn't yet seen the 29th, definitely not seen the 1st, right? Let's say we were looking primarily at these 2 days happening, but they hadn't happened. So let's pretend they have. Now, if you go back historically, you can map out the story of volume. So for example, we can see there was high volume here, right? So reasonably, this becomes an area of support at the lower third of the candle, right? So what I always do is I'll divide my candle into 3 parts. 1, 2, so 1, 2, 3, right? So if you divide it into thirds and you take the lower third, right, and you got a high volume day, you would naturally make the assumption that there's going to be a hell of a lot more activity at the lower third of the candle, since it was a bullish day, or there's going to be a hell of a lot of activity on the higher side on the candle, right, on the close. Now there are ways to visualize this, okay, and that's why we use market profile. So if you had a market profile chart, you'll be able to visualize the time price, the TPO or the rotation within the candle. So you'll be able to see if there was a high degree of concentration of TPOs at the low, which would say that's your bids, and if there was a high concentration of TPOs at the top, then you say that's. And if you guys are getting lost with market profile, I have a ton of videos on this channel covering market profile, so you don't need to feel lost. You just need to go watch those videos. So you'll be able to get more detail and more data. Right? Trading is a lot about data. So if we can get that additional data, we can see what's going on here more. But let's pretend we didn't have access to that data. We're very new to this and we're just trying to build the initial stage of the market. So from what we can see here is that, well, we got a bullish day, solid close. We're making some assumptions now that there's going to be a lot of bids at the bottom and a lot of offers at the top. One of these is going to give way. We kind of already know that, because based on the strength of the day, if it's sellers that are winning out, we're going to get a big push to the downside and we should eventually break the lows of this, right? And then we should accelerate low. So we know that there's some volume here, and the easiest way to map that out is to grab a little rectangle and then just highlight the lower third. That's the first step. And then we want to go back further in history, right, and see when is, so we know this is pretty big. So is there anything bigger than this? So let's go and we go back to the 24th of January and we do see that. So again, we got a smaller body, a lot more tails, right? So it means there was a huge rejection at the low, a huge rejection at the high, and the open settled pretty close. A couple of ways you can do this is you can take the whole candle as relevant, or you can take the shadow, right? So the lowest. It doesn't really matter because at this stage of the model, you're making a lot more assumptions because you can't see that data. Now, if you have a market profile chart or time price opportunity chart, you will be able to see that data. If you're working with a footprint chart, you'll be able to see that data. And for stocks, maybe footprint charts are a little bit more ideal because they're aggregating the order flow volume, and you can see that concentration a little bit clear, right? So that's always, you can see that data. So depending on the level 2 data insight that you're looking for, you would use one of these tools. Either you're going to use market profile, or you're going to use some kind of a volume based tool or order flow based tool like footprint chart. So once you've been able to map out that order, so you've got now some established supports. You got this one here, you got this one here, right? So this is taking us all to 24th of January. So this is actually, you know, more than a month's worth of volume data. So let's go further back. Is there anything bigger than this, right? And that's how we map volume. We look at what's big. So is there anything bigger than this? So we push up, and yes, there is. So we can see here that there was also a huge volume, so a bit more of a shadow. We push to the upside, and again, we're going to make the same assumptions we made before. That this is a full body candle. There was a lot of quoting here. That's why it's a solid body. Otherwise, it'll have a lot of shadows, more reject. And then we're going to map it, do the same thing. We're going to break it out into thirds, and we also have a shadow. So again, we know that the lower third, we're going to probably have a build up of orders, right? And then that's what pushed us higher. And at the top, we're going to have probably an abundance of sell, right? So for this day, we know that if we trade below the low, then we're probably going to break out to the downside. So we're going to create another support level. Do that again, cross here. So now we've got volume data for this bar here. So what's that mapping out for us? It's telling us now, and this takes us all the way back to the 24th of January. And if we want to go further back and say, okay, well, what volume is bigger than this? Well, we haven't seen anything bigger. You know, if we go back historically, what is probably the second biggest? And that will be this one down here. So when we think about it historically now, let's take another chart. So from here to here, which is bigger, we can see that this is slight. So this is also another key volume reference point. So we can see this was a big driver. So again, if we divide it into thirds, now this down here, that becomes an area of support. So I think from where we are, and obviously you can see I've mapped out this one here, which was a big spike against these two. So this is also a very interesting support, right? And I can also see how the market has behaved against the support. So we pushed up, we pushed back into it, we formed this doji candle here, very low volume, and then we started to close above. So we had an engulfing, and then we gapped up, right? So this becomes an interesting place to be long with risk, right? So if you're going to play this with stop losses, for example, this is not maybe an investment, it's a trade. Then we'll play this with risk to the high. So that could be up to the highs here, for example, or just into the open of this bar here. So that's a 1.88 because of the way we positioned risk to reward. And if we're trying to achieve at least a 2-to-1, then that puts us about right. So we would have achieved. Now, of course, I don't like this way of doing RR because it's arbitrary, right? So even though we're using, you know, this candle here, we're using this volume base. I mean, someone could tighten it and then they end up with a bigger risk reward. I mean, it's not something you can regulate as a constant, right? So again, we're just arbitrarily aiming for 2. What I prefer is, so just get this for a second, I prefer to use a defining point where there's liquidity. So above the highs, for example, will be liquidity. At the open of a specific day where there was a lot of order flow to the downside, any trading back into this area would be a good place to take profit. If I have a long bias and I feel that, well, this price action will continue over several days, and this is going to be a multi-day run, then I might continue to stay in this trade to capture a much bigger return over a longer period of time, right? So again, the returns one can make in the stock market are huge. So even when you're trading like this, because take for example, this was 4 to 5 points of risk, right? So if at 100 shares, that's $500, right? So let's just say we're using a block or a lot of shares, which is 100 shares. So 100 share lot. I mean, eventually where this thing went, if we use our regular target example, you're looking at about 13 points. That's $1,300 in the space of 1, 2, 3 days buying 100 shares. Well, of course, to buy 100 shares at that price, it would have cost you at the execution, it's about 13.5K. Now, I understand not everyone has that kind of money lying about, but the reality of it is you're going to make a pretty decent amount of money if you're able to have that capital available and your downside is very, very low. So you're risking $500 from a 13K pot, and you're looking at potentially in the space of 1, 2, 3 days, right? In 3 days, you're making close to $1,400. Now, if you break that up in terms of what you've made on that one singular trade, it's crazy. Now, if we extend that out, right, let's push this to like say like here on the when we had this sort of bearish candle. I mean, that's like 2.5K, like it's more than 2006, give or take, over the course of 1, 2, 3, 4, 5, 6, 7, 8 days, right? So it's a week, a little over a week, right? So that's about 2.5K a week. Now, I doubt if there's anyone watching this video right now who would mind making 2.5K a week. Now, there are a lot of people that I know that don't make 2.5K a week in their day jobs, point in case, right? But they do have 13K available to put in the market. Some of them have even more, right? So why aren't they doing it? It's it's maybe ignorance. They don't know. So the bottom line is that I'm sure that you are those kind of people who can afford to do this. It's just the reality of it is that you're probably focused on Forex or something that doesn't have the same kind of edge. That's the point I'm trying to
reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
So again, putting it into focus, you know, you can sort of see that picture here, what's possible. But all of that came from the bounce off this volume, this volume flow or float rotation. So we've built some history. Of course, if the market was to trade back down here, it's an absolute bug, but we do know because of the inflationary environment and so on, that's not like. So as we push to the upside, we create these support levels. What we're looking for is for the market to push out and then come back and retest these levels, and then we can position for the upside. So again, if we take another example, we had this support level here, and then on the 31st of January, we pulled back into that level on AMD, and then we posted huge volume. So at this point on the open, we closed. We just want to get in on a limit. So we've closed up here for the day. The market opens. If we can trade slightly back into this area or even close to this bar, somewhere in the body of the bar, that could be a good long position. We just want to stay just below here for risk. And again, our target will be into something meaningful like the open of this bar here where we had a lot of supply and push the market lower, and that's kind of what we're looking for. Again, this is roughly about a 2 to 1, right, on a risk reward scale based on what we've positioned. Again, $546 to make $1,100. Again, not a bad trade. We see a similar scenario here where we pull back in again. So we go up, we push up, we pull back in on the 6th of February. We close on a red bar, and then we open the next day. Again, what we're looking for from a trade, we could have traded this on the close or wait for the open and then obviously trade it just about on the open. So again, you would be something like here. Again, you're looking to stay just under the volume bar, a little bit bigger risk, so you'd have to weigh this up and decide. But again, we're looking for something like a 2 to 1. Obviously in this case, we just didn't quite get that. We traded up to the highs, but it wasn't quite a 2 to 1. So you'd obviously have a decision to make as to whether this trade was worth sitting in, or do you want to sort of get based on your execution because you're trading a defined, right? Again, we can see this swing lower again, right? So even if we make the assumption that this trade wasn't your best trade and you couldn't really control this, and then we ended up trading a little bit lower, let's say even you get stopped out, but then you can see from the close we had here, this become a great opportunity on the open, gapped a little bit on the open, and then closed a little high. So again, on the close, this would have been a good entry point. Again, you could sit just underneath the low of this bar, and again, what are we looking for? Back to the high. This would have offered a really, really good risk to reward because of where we got in on the trade. And then you're looking for, again, a push. So again, that's a $1,600 trade. So again, even if you were losing money on the other trade that we did, it wouldn't matter, because you're going to come back and you're going to make some on this and you're going to offset that. So we're not talking about going for the parabolic move. Really what we're talking about here is just trading what looks like a rate. Now we can see that the concentration of what has been a lot more on the downside than, say, for example, what it has been on the top side. So we can see that the supply side, which was against this bar here, is consistently breached. It's not very stable, and if we observe that relative to the support side, it is very stable. So that's given us some ideas that, well, people are willing to buy this and we're very stable at the support. So even when we get this weird price action where we gap under and then we close up, it's still giving us the indication that the market is very strong and a breakout is like. So once we we did this huge gap up, traded there, consolidated against the support volume, and then we broke up, then this becomes a breakaway trade. So we can see from the gap up, we're about to make a big run to the upside. We've consolidated for a little bit, a lot of support volume. If you're right, you're going to get a really big. So here is the kind of trades where you'd want to set in here, get your risk underneath volume, and then you're looking again for a really, really big put. Right, and this should hopefully take us strongly to the upside. So again, we've got a solid close in this day, gap up on the open. We're about 2-1 already. You can look to cover that trade. Right, again, that would have been 1,800. So, and this is happening over 2 to 3 day sequences, right? So think about how your P&L would have grown just trading primarily off the volume supports, and you're seeing very clear indications when we hit those areas that the market is really strong and we're about to make a big move. You don't need anybody to tell you this, right? It's clear as day because you've been mapping out the volume that has been pushing this higher and higher, right? So again, now we're in parabolic territory. We're going a lot higher. I have a very long bias on AMD. I think we're going to eventually trade about $273 a share. So there's a massive bullish bias in the equity market. Once you've seen the value in a stock and it starts to move, there's tons of opportunity to get in and make money. It's like taking candy from a baby. A lot of people don't realize how easy it is. It's much easier than sitting on a Forex chart.
Listen, I'm a boomer. I don't have to take shit from anybody. I've been living on debt and Social Security for over a decade. Why? Because I earned it on that cold planet up there. That's right. I did that. Me. Because I'm a baby boomer.
I can guarantee you. And my last video, I covered volume Forex, right? Again, if you're trading some of this stuff on the intraday, I won't say it's easy, but it's definitely easier than trading Forex, right? So as a beginner, you can build a lot of confidence when you start to trade with the equity. Yes, you might need a little bit more capital, fair enough. But again, some of the CFD brokers will offer you a lot of leverage. So even if you don't have that 13K, let's say you had 5, you could still get in on the game, and you still might not mind risking $500 on a trade with a 5K startup capital. I mean, you guys who trade prop firms, people are risking 25% of their entire capital in order to pass some prop firm challenge, right? Stupid, right? So if it's not outright stupid. I get you guys want to take advantage of the fact that you're buying all this buying power so you can get these payouts, and it's in a way it's a mod. But let's face reality, right? If you got $5,000 lying aside and you want to learn to trade, considering a lot of people will spend a lot more of that losing on trading Forex and things that they don't fully understand. I'm not saying don't trade Forex, but trade it when you fully understand the markets. Trade it when you fully understand what you're doing. Otherwise, you're going to lose a lot of money. And through the course of this YouTube channel, you will see me do videos on Forex. I think one of the challenges we have when you want to give people good value is you have to be fighting the YouTube algorithm, because that likes to suggest to traders like you a lot of crap. Right, a lot of things because that's what people are searching and Googling for, and that's what's coming up. It's not the real stuff. It's not the stuff you need to know. But you will see me do videos on Forex where I show you exactly how to trade Forex in the correct way. And I've done a couple of those already, right? But I'm going to keep building on the models that are going to make you successful as a trader, and they're all going to be for free right here on YouTube. But in any case, guys, if you're going to start this business, or you're going to start in this business, right, I would suggest start with the stocks and start learning how to trade volume. Volume trading is what is going to get you where you need to be. right? You need to understand how that works. Demand and supply, demand and supply. So you would hear people refer to some of the stuff that they've done as demand zones. Now, I don't think a lot of people do it correctly, right? Maybe there's some people out there who do this and show you how to do this correctly without charging you an arm and a leg. I'm showing you here right now for free, right? But if you do this correctly, you're not going to fall on the bad side. You're going to be able to start making money. Right, serious, guys, serious. In any case, thank you very much for sticking around. I hope you learned something today. Till my next video, guys.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?